following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks. Welcome back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Listen to us anywhere on your mobile phone at tfnn.mobi or check us out on Tiger TV at tfnn.com. And tune in at local radio stations for various shows as well. All the listings are available on the site. Let's check out where the markets are at right now. And definitely feel free to call in if you got any questions. So this morning, we did a little range-bound trade on the euro-dollar. I'll cover that again for you. We'll go through it. And worked out well, me and Steve Rhodes. And just went in and used some of the TAS software. And I was looking at some of my stuff. He was looking at some of his stuff. So everything had confluence lining up. Went in and like, this thing isn't going anywhere right now. How can we make some money on it? And so we just went in and made some money on it going nowhere. And I'll go back over that with you again today. Let's check out where the S&P is right now. Right now we got the S&P is up 8.75. We have the Russell up 11.6. Nasdaq currently up 12.5 with the Dow up 83, 84 points on the day. Copper is down 1%. Nice big move on copper there. We got gold is down $1.40 and silver is down a little over 0.5%. Natural gas is currently up about 0.5%. Pretty slow day for natural gas. We got oil is up just a mere 20 cents. Corn moving pretty good, up 7 points right now. And soybeans pretty flat, just down just shy of 3 points. Look at the euro dollars down 26 pips. We got the Aussie dollars down 6. The pound dollar is down 12 pips right now. We got the dollar franc up 26. The dollar CAD up 13. Dollar yen up 11. Aussie yen up 1, euro yen down at 9 pips, pound yen down 7, and the euro pound is down 8 pips on the day. So let's talk about some of these trades that are going on and some of the ways that you might be able to take advantage of them and put the different pieces together. And I want to get my charts going, but I think they may have locked up for a second. Not my charts, but the chart share software. You got to love that. So nothing like live radio. But I can walk through it with you. We can still go through it. Just be a little bit more radio-ish until that comes back online. All right, so let's see where we are and what we can do. I'm going to pull up a few different charts. And we'll just, like I said, walk through it step by step. Had a nice monster move, by the way, on Russell. Ran right up perfectly to one deviation. If you don't have access to the deviation levels, definitely check out the scanner. They come in there every day. And we got the futures and forks that did them every day at around 8:30 each night. And but went up like right to, we were looking at 1166. That's right where we went to. Okay, so it's coming on through. Good. Wasn't quite sure that I was sharing. But yeah, ran right up to one deviation. This morning, though, we were talking about gold. We were talking about Russell a little bit and going there. Yeah, see, it's frozen. I didn't think it was coming through. So we're going through, gold and Russell and euro dollar and looking at the euro dollar. I mean, literally just a whole lot of nothing happening. And that's pretty much what we said would happen. There's a whole lot of nothing. And we got in on the trade, and I was like, we could do this thing to 3, and it looks like it just about still would have worked at 3 o'clock. Because still, the bar looks the exact same as it did back in, let's see here, back literally at the time of the show at 10 o'clock this morning. So it started, I have literally had the same bar. I use tick-based bars, so they only make a new bar when so many ticks have moved. And I've been on the same bar for the last over 3 hours. Exact same bar, just not moving at all. So But so with that, let me see if I can pull up the trade that we did, and I'll talk about it for you. But yeah, there's some sort of little odd issue. I'll get it solved during the break. It'll be easy. But anyway, so we have that trade right there, and we went in basically and we bought a binary below the market, and it was right there like 36.25. We sold one above the market like right around 36.38, and we had about 30 or 40 minutes, I think, till expiration on that trade. We put the trade on. Market didn't do anything. Just stayed right in the range. And I think it did like 5 contracts, collected about $160 and 40, a little over that. And in about 40, 45 minutes. And just on nothing happening. And because what I'd noticed is the market, ran up, came back down, stayed really within the expected movement that I had plotted out yesterday for you on the NFP for the Iron Condor possibility there. And definitely, everything stayed right within that range, works really well. And I know my camera's not coming through, but I'll work on it during the break. So, but looking over at the euro dollar there, so anyways, we were staying in that range, and it ran on up, and it came on back down to the low, okay? And to basically the same low it was at for the overnight session, basically right there about 8:30. And stopped right at that point. That was a negative 0.5 deviation level. And when it hit that level, it's like we hit that level at first right around, a little bit after the open. So the last little push right after the open. Then it just sort of hung out there before it just went flat. And I'm like, you know what? We've had our move. Usually somewhere, closer to 11, but somewhere around 10, 11 o'clock, things just start chilling out on the Friday after NFP. And so I was like, let's go ahead and do a range trade. I was like, what do you think? And he went through and he pulled up several things we put together. And, the levels just looked rock solid. And so we went with it. And let's see here. I don't know if this will even come through over here, but I know y'all aren't seeing most of the stuff that's showing up right there. We'll try and see if this works. It's just the camera doesn't seem to be picking up much right now. I'm not sure if the TOS charts are coming up or just the quotes, but my guess is just the quotes. But looking over at the breakdown of the gold, we had gold move down. Let me see if it stayed at the expected. Yeah, it went down. It hit that spike low, and we basically said it's going to stay within that range. I'm going to pull up the 10-minute bar, and we'll see if it has done what I talked about. I thought it would do. And so yeah, basically there's 2 bars right there, and it's about 10 o'clock when we're in the show, and it shows that 10 to 11 there. And so I'm like, hey, it's probably gonna stay within like the high of that bar and the low of the day. And we're looking at like 12:53, 12:54 being like the high for the rest of the day after the show, and then the low being 12:45, and it looks like it's doing exactly that. And another great, just simple binary butterfly, potentially an iron condor, but didn't figure there'd be enough premium to really condor it off. So iron butterfly trade, and less money you got to put up on it in this case. So a little bit of return on investment, and working out great so far. So just got to stay down there for a little bit longer, but we're just about there. In just a few minutes, we'll have wrapped up the session, and we'll be able to move on forward to the next trade. But gold, your money should be maybe even freed up by now already if you put on that gold binary butterfly at this point, if you took profit. If you didn't take profit, like I said, there's just a few minutes left to go, and gold will expire out at 1:30. They set the expiration times on Nadex to expire basically at the same time as the pits do for the main daily contracts. So Forex is a little bit weird and different now because they added all these different dailies going around the clock, so it adds a layer of complexity. But basically the main daily contracts, like gold at 130, silver at 125, on down the list, oil at 230, indices, closing at 415. So basically when the pits are closing over on the CME. And let's see here. I want to be able to get up the charts for you because I know it's harder to see. But let's see here. I want to get the news reports. I want to run through them with you. It's just a little bit more difficult to do if you can't see anything I'm doing. I'm so used to that. And all right, so we had this morning. We had the employment change came in at pretty much on expectations for the CAD. We got 24.5. Got my little twang going on. Been hanging out with my daughter too much, going out to the rodeos here. So she's a little barrel racer. But we got a forecast of 24.5 thousand and the actual at 25.8. Looking out over at the unemployment rate in Canada, we had a 6.9% expectation, a little bit higher than expected, hitting at 7%. So unemployment rate went up a little bit there for the CAD. Looking at labor productivity, a little better than expected, not as strong on the impact usually in and of itself. Going over to non-farm employment change, pretty much right at expectations, the NFP report, as everybody calls it, and expectation of 214 on 217. The unemployment rate was expected to be 6.4. It went on back down to 6.3. That's where it was last month, so it wasn't really an improvement. It just stayed the same, didn't get worse. And but that did lead to, hey, employment's good, market rallies, no big surprise there. And then average hourly earnings basically stayed flat at 0.2 on the expectation, an increase from 0.0 on the last expectation. And it's basically the change in, was there an increase or decrease in pay is what it means. So there actually was an increase in pay by a whopping 0.2% for the average pay paid out by companies to, for labor. And so, a little bit more pay starting to go out there. Unemployment rates, staying the same. It's not going up. NFP, non-farm payroll, a few thousand more jobs added than expected. The last report, let me see here on the revision. Looks like they revised the number down a little bit, down like 6,000, but it was up at like 288, so it was pretty high. And that's better than, changing it 3 times in the same day like they did on ISM this week. But anyway, so, jobs added was a little bit slower than May, but a little bit higher than expectations and still higher than pretty much besides last month. I want to say higher than the last 6, 7. Really, it's the second highest increase in hiring that we've had since April 5th of 2013. So, or I guess actually March 8th was 236. So, and then since between that, we haven't had a 217 number. So that's good. So that's the number of people employed in the previous month, excluding the farming industry that get added on. But that number of employed people went up by 217. And I know it's weird because unemployment rate is like people on the unemployment payroll, but employment change is basically the how many people were employed that have been paid. And that number grows more than it has in quite some time, or at least twice in a row. So good news for our labor market. All right, y'all stay there. We'll be right back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. So again, we were just looking at a variety of different trades and charts, and pull that up, go over that with you. I had the 10-minute chart up, and we were in the current hour right here. So let me drag that in. We had settlement right at 12:53, so we were looking at 12:54 was our high that we're looking at. Let's see, did we hit that high? Get detailed over here. I'll grab a crosshair, makes it easier to line things up. And what do we got? Right to 12:54. Wow, on the dot. So we got 12:54, and it's still sort of pushing up on that, but we have 5 minutes, so I think we're gonna be good and settle right on in there, stay within that zone, and that's sort of maybe high volume for the afternoon. That's sort of a take profit level if you look at it as well. So, moving the market down, take profit. Big volume bar, 10 minutes, okay? They retrace it on back up, okay? Do a full retracement on that last drop. Right back up to where? Right to settlement, okay? Major deviation level. Then what happens? We get a massive volume spike right there. What's that going to cause? That's going to cause the market to drop off, because what are they doing? They're taking profit, which will, eventually turn into potentially a magnet, and that's sort of what's happened on it so far. But we can look across. We can start seeing the magnets. I mean, if you're not tracking magnets, you are missing out. I'm working on a magnet tracking software right now, actually, hoping to have that done in the next few weeks. But just to help me spit out all the magnet levels on really any market instantly. And hopefully we'll be able to figure out a way to distribute that out there and just help people out, because it's the most powerful thing that I can use to find out where price is going to. Or where, if the volume doesn't exceed with any kind of strength, when it hits that level, where it's going to bounce off of. But it gives me probably the best way I know, period, to give price target levels. The deviation levels give me an idea of where to expect the market to chill out. They're great for trailing stops. They're very good potential places to stop placing trades, like new trades. Maybe be a place where I take a profit. So, but is it going to go to 0.5, 0.7, 1? Like what exact precision point over periods of time where I'm going for just massive trades? And sometimes, I'll go for 1.5, 2 deviation level trades in the same day. And looking at certain setups, certain volume spikes that have happened, and where the market spikes down into a deviation level or into a previous magnet spike and has some pretty decent volume, but only like on one bar, and then it closes way back up above that magnet price level. I'm like, okay, this thing is going to chill out for a second, and then it's going to pop in the other direction and go back to the next deviation level. So this the next, magnet spike level. So as you pull those up, you can really look for those big bangerang trades where you're going in for like $8 and making $90, and you're making 1,000% return on a trade or more. And doesn't mean that you're always going to do that, even if you can pull it off. And I usually go conservative. I don't go for the full 90. I'd love to. It's always fun to do when you do it, but it's also not fun. I'll usually go for like when it hits the strike. So if I buy for 8 or 9, I get out for 50. That's several 100% return. I'm very, very, very happy with that. And nowhere else can you get that kind of volume. What kind of stock you need to go trade where you can buy at 9 and sell at 50, buy at 20 and sell at 40, and do it every hour, much less every day, much less every week. So, do you have to get used to it? Does it move fast? Yeah. But it's not that incredibly difficult. It's just something new to learn. It's not as simple as I buy and sell. It's which one do I buy and sell, and when do I buy and sell. So, that's the challenge in options, as you have options. But it doesn't mean that they're incredibly difficult to trade, and doesn't mean that it's not something that you can't, put together and, practically apply in the way that you trade right now. It's not that you have to change everything that you're doing. It's just another way to do it. And what I challenge most traders to do is, like, if you're actively trading, if you're actually actively really trading right now, keep doing your trades, but like open a Nadex demo account and then start placing trades side by side. And when they don't seem to work and you think they should have, like let's say they worked on your futures but they didn't work on the spreads or they didn't work on the binaries, ask questions. Okay? Let me know. Call up. Let me know what you're looking for, or if you have a scanner subscription, use the help desk. And say, hey, this is what I did. Why didn't this work? And anyways, when we get back, I'll do a little sneak peek preview what we got coming up next week, and we'll do a review of some of the trades that you could have done this morning on the NFP report based on the information I gave yesterday. I posted the entire information there in the den, but we'll go over that. Stay there. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so just going over a review in the den. Traders going to check out ES for they're going to pull back on the 1945. We have a deviation level of 1945.25 and 1948, and it hasn't really been able to break that deviation level since about 10:30 this morning. And it's been oscillating back and forth between it, so pulling right straight to 1945 right now. Don't see that happening without some volume to be able to push it down, and we haven't really had volume on the indices all day. And that's why I like to trade FX on major news days, because they're not as choppy. I find that I get some nice clean trends on them that I can trade, and I will trade some indices, but I'll usually go for like that first big move, and then I got to get out of the way. That's just my own personal experience. I'm not a big trader on the S&P unless I'm scalping. So I'll scalp, I'll go and I'll throw some spreads on, and then on the S&P I'll go on and just grab like 50, 50, 50, just keep grabbing them again and again and again. That I'll do. Grabbing a point over and over and over again. Like, and this would honestly be, and I talked about this right at the end. I don't know if you caught it, but right at the end of the Bull Bear Binary Hour this morning, I said today, for the rest of the day, is like the perfect scalping opportunity because the market should be very, very flat. And that's really when you want to be a scalper. It's not as fun in the sense of it's slow, okay? But, and I'm not talking about like going in and grabbing like, 10, 20 ticks. I'm talking about grabbing like a point. And so I'll go in there and, I'll literally grab like 1 point, take the trade off. 1 point, take the trade off. And, maybe it takes a minute or 2 minutes. Sometimes you'll get a little minute in there where it's like it'll start popping a little bit for you. But you just grab that scalp over and over and over again. And, if we look at, what's the, here, we'll throw this on here, just like on the 10-minute bars, okay? I'm going to throw on average true range. And let's see, where are we? Average ATR. And then I'm going to make it just the period of 1. Okay, so it's basically showing me what my high to low is of every bar. And let's see, let's plot it a little bit differently. Instead of a line, let's make it over here. Go ahead and grab that. Let's turn it into a bar. Make it a little bit wider. All right. That'll give us a little better idea. A little easier to see the ATR there. What kind of movement we got. And then I'm going to go ahead and grab this as line. And we'll set it to a size of 1. Because here's what I want you to see. How often are we getting a 1 point move? Pretty much every 10 minutes. You may get a couple in there. It may go up and down, up and down. So, but staying within that range. So, I mean, right now, you got another, 1 point move. So, you could literally, every 10 minutes, you're making $50 if you're grabbing a 1 point scalp. Okay? Which is pretty sweet. And so you go on, and well, what would that have cost you? How could you put that together? Yeah, that's really risky scalping. Doesn't have to be. Okay? Sort of in, what all you put together with it. So if we go in and we look at, there we go, the scanner here, pull this up, and we'll look at the spreads. And if you like the scalp, if you want to play these markets, it's a cool way to do it because it's almost one of the reasons. Like it's actually out of. As far as doing like miniature scalps, S&P is the one I do them the most in. As far as doing like going for now like 10 ticks or 12 ticks, 15 ticks, I'm going to do that a lot on things like pound, euro, Russell. As far as trend trading, all the indices, Russell's my favorite by far. Okay, S&P just moves too stinking slow for me, and it moves in quarters, not dimes, which I guess some people like. I don't like it. It annoys me. Now, of course, if you're trading the spoos, you're on the floor, then you get the, the nice advantage of the, the dimes. But of course, it's worth a whole lot more per point, like $2.50 a, tick, but or point. But if we go over here and we look at S&P, and let's just find, how would this work? What would happen if we want to go and just start scalping with the S&P? Now, let's say you just want to scalp the short side. Maybe you want to scalp the long side. Maybe a little bit of a bullish view. There's so many different ways we can do this. But we go in and we find out which ones we want. So I go, yeah, that one's okay. That's like a point away from where the market is. That gives me till 3. I'd really like to have it till 4:15, but that'll give me till 3 o'clock. That gives me an hour and 20 minutes. And so I buy 3 of these. Okay? They're 1 point away from where the market is. 10 ticks on S&P, that's 0.1. So that's why, why you might want to trade it on Nadex. Because you do get that tighter spread. You're stuck at the quarters like you are in the futures. But, again, you like the futures. That's cool. Go on over here, and we place this trade. And then what we're able to do from there is go in and Let me just open this up and show you. I did this for some traders the other day. I see it's already moving up. Got to get it going. All right, so you go in and let's say you buy 5 of these, okay? Right here. Because you think the market's going to, oscillate back up. So we put those on. Okay? Pretty simple. Now what we do is we go over to the futures market. And let me get a static dome up for you. And so we have a little bit of a bullish view. Let's say, whatever you have. Whatever view you have, you probably want to start off going in that direction. Okay? And set it over here. We got the S&P. Okay. Set up. Now, we bought the spread at 1947, okay, 0.9. About a point away from where the market's at right now. Ideally, you put this thing on, and then, it's moving up a little bit. But if I sold right now at 1947, and the average price is 1947.9, the market, when it gets me, well, think about it. If I bought it at 1947, I sold it basically 1948. We'll just round it off to make it easy. What would my risk be? It'd be, 1 point, right? It'd be a dollar. So my risk on the entire trade is $1, okay, or not a dollar, but 1 point, which is $50. So that's my total risk. If I decided to go in right now, it's actually a little less than that. If I decide to go in right now and sell on this trade, that's where that's how much risk I'd be taking on an S&P future, and I'd be hedged all the way up to 1955. So you get to risk 1 point, but have a 10-point stop. Okay? So, so it's popping up a little bit. Now, what's really beautiful is, let's say you put it on your right, and it does go on up there, 1948, 0.25 where we bought at or whatever. Or actually, 1948 where we bought. If it gets up there and you sell there, now you're fully hedged. Meaning the market could go up 10 points, you'd make 10, literally you'd make 10 on the spread, you could lose 10 on the future. You're fully hedged. And if it goes down, well, now you're making money on that. And what you do is you just make sure it makes more than your max risk on your spread before it's said and done, before you take off the first one. Or you take one off and you grab $50. Sometimes I'll even go and I'll do twice the amount. Okay? So the reason I'll do that is because then I can basically play with a couple different scalps at the same time. So, maybe I start one down here with $50. But then, if it pops back up, I can put another one on so I can layer my scalps in, but I have the hedges available. And that can make it a little bit easier as well. And again, it's just a very, very simple way to do trades. But, at any point, I can layer on another trade or whatever. Okay, so we put that on. We have our hedges on. We're in at right around 1947.9. And then we go in and we basically say, okay, well, let's go ahead and just let's sell one contract. And we sold it, about 1947 there. So we'll take it off at, we'll just put a buy down here at 1946. Okay? Now, just in case it pops on up if I want to, I could, or I could wait. But I could go in here and I could put up another sell right up on here. I put that trade in. So there's I just let the trade oscillate, let it do its thing. Let's see, let me pull up this. Was it spitting out to me? Okay, so we gotta just adjust the order type. Let me adjust this real quick. And I thought I had it set. Got that on. Got that on. Oh, because I had it set for Russell earlier. And Let's see if that'll work. Let's see, sell. Yeah, okay. Yeah, just wants the order up at that point. So we're good. So we just let the order basically hang out there, and then when we're ready, if we want to go in and put on another order, we can add another position in. Now I just let the oscillation happen. Okay? There's not much I got to do. And if it goes up, I lose $50 on the trade. Okay? If it goes down, I can grab $50 on the trade. If it goes like way up, I still am only going to be down $50 on the trade. And this does take time. It's not like one of those things where you just, like I said, it's sort of a slow process. Like I said, once every 10 minutes, it's moving a point, which is perfect scalping territory. Okay, and then I need to look at, okay, realistically, what should my take profit be? Because where are we going out on a low over here? So let me set this to the top. Okay, and then we go right here. Okay, low, 1940, 6.25. Really may have gotten a little bit late on that one, so we may move it on up here. 1946.5. And just because we haven't really been going that low for quite a while. So, I mean, that could be grabbing a tick, you can grab a couple ticks. It's really, it's just scalping, but it's scalping without any pressure. I'm able to go in, I'm able to go for $25 or $50 or $75. If I want to add my other one right here because it just doesn't seem to be moving, and I just want to maybe have a small one where I'm going in and just grabbing some smaller orders, then I can do that as well. Just going for $25, $15 over and over again. And as you get more and more used to this, you'll get a little ebb and flow to how to put it together. You may end up doing 3 contracts or whatever on the trade. Maybe you end up going and doing 15 spreads. And one of them you're going for, you have it just in case it flies up against you, so you have sort of a safety stop so you can still work the orders down here. Another one you may use basically in the range that you think it's going to stay in, and then another one you may use just for really small scalps, like little 1-2 tick scalps, which as long as your commissions are decent, should work perfectly fine for you. You're going in, it sounds funny, but you grab $10, $20 over and over and over again. You only have a $50 risk, okay? You only have, so if you can grab, a net out, basically grabbing about $10, $25. If you grab $25, you grab 2 ticks. Let's say your commission and fees all in is $4. You're having $21. You need to make a couple of those, and then after that, it's just, it's easy after that point. So right now it's really trying to stay just inside this zone. You can see where the orders are really light right there. They're getting eaten up really in these 2 different places. So you could go in and if we want to make this really tight, we could add one more right there. If it oscillates up, we'll get filled. Now we're behind everybody else. We're behind all of the other limits. So there's 811 that were there. So I basically got to see 800 contracts get filled at this price before I'm going to get filled. And so one of the strategies I've done is I do like to scalp in both directions, okay? And you can take this to a whole other level, and you can actually put on a straddle, okay, for the purpose of just trading the straddle. And it's sort of be, if you've ever looked at gamma scalping, it'd be very similar to gamma scalping. But put that straddle on, as it moves up and down, you just grab each contract, and again and again, just repeat. And the thing is, by doing a straddle, you can hedge the short trades and the long trades and just scalp in both directions. But all right, stay there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. All right, so just looking at this trade and to sort of show you if you don't understand what I'm talking about, what we did is we went in, we bought 10 spreads, okay, on the S&P. Why do we buy 10? Well, because they're worth $1 a tick, and they tick in dimes. So 10 dimes and $1, they're worth $10 a point. The S&P is worth $50 a point. So I need 5 spreads to equal 1 S&P E-mini future for a hedge, okay? And then why did we buy 10? Because I wanted to do 2. If I want to do 3, I'll buy, 15. I'll buy 5 more. And but as you can see, what will happen is you'll notice like there's a spread here, the difference between where I'm in. I'm short at 1947. I'm long at 1947.9. So I have basically a 1 point risk in there I need to make back. If I don't, the worst thing that's going to happen to me is I'm going to be down, $50 a contract. Okay? But I could also decide just to take these contracts off. Let's say I think the market's going to fly down. If I take those orders off, guess what happens? The market flies down. This thing has capped risk. It's going to stop losing. And so if it does break that 1945, right, which we're not really expecting for it to go to, but if it actually did break that level, then I will be able to enjoy a nice, big, profitable trade where I only had $50 risk per contract, but it could go all the way up to 1955 without me losing more than $50. So this is why I got so excited about this when I learned the strategy. I put the strategy together, I developed it, because I'm like, finally I can trade futures without my heart going through my chest every time there's a tick in my direction. Right? Because you put your stop up and you're, okay, I'm going to go short the market. We're at the high right now. The high is 1948.25. I think it's going to go down. Let's just say that's your opinion. Well, what are you going to do? How are you going to put that together? How are you going to take advantage of it? Where's your stop going to be? Every time this thing starts going up and down, you would have had a heart attack over the last 3 hours. Right? Why? Because you're watching it and your heart, it's going up a point, down a point, up a point, down a point. And it's happened over and over and over again for hours on end, going nowhere. And so I just put the trade on, I chill out, I come back, I look, I'm like, oh, let's go ahead and oscillate it back up. Let's put another one on. And that's it. Okay? So this is like hedging, a scalp strategy, but it's the ultimate hedge for scalping. But you don't even have to use it for scalping. You could just use it for a directional play. So I could leave one on there that I just scalp again and again while it's staying flat. And then I could have another one that I hold on to, maybe like I went short on it. I put the order, go in, put that, say, down here. Make a nice, nice profit on it. You can put it even lower if I think the market's going to go, down to, fill the gap, let's say. And so if you thought you were going for a gap fill play, this would be a way to play a gap fill play without getting killed on your trades. Okay? And do it on a pretty tight margin as well. So you can go in there and you'll really let that thing move down. If it actually did go back all the way back down to 1938.5, you could have this thing down here, take profit day just like right before, and set it. Now, what if you think it's only going to do, say, a 50% retracement? Well, you go in there, grab your fib levels over here, and let's measure basically the low on up, and pretty much right there. And if I zoom in on it, what I can tell is we're about 1944.5. That'd be about a 50% fib. So, Gann, Golden, whatever name you want to go off of there for the 50% move. But 1943. So about 1943. So if you just want to do that, then you just adjust your order. But these are all ways you can play all this, and now you get to think about your profit management versus your risk management that's covered. Stay there. It will be
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.